The stock market is a beast. It's unpredictable, volatile, and can make you rich or poor in the blink of an eye. Recently, it's been on a tear. After a wobbly start to the year, the market roared back in recent weeks. The Dow, the S&P 500, and the Nasdaq all hit record highs. Investors are feeling bullish, pouring money into stocks and driving prices higher. What's behind the rally? A confluence of factors. The economy is strong, with low unemployment and rising wages. Interest rates remain low, making it cheap to borrow money and invest. And corporate profits are soaring, fueled by tax cuts and a business-friendly regulatory environment. But the market's ascent hasn't been without its bumps. Trade tensions between the United States and China have flared up, threatening to derail global growth. And there are concerns that rising inflation could force the Federal Reserve to raise interest rates more aggressively, putting the brakes on the economy. For now, however, investors are choosing to focus on the positive. And why not? The good times are rolling, and there's money to be made. But as any seasoned investor knows, what goes up must eventually come down. The question is, when will the music stop? BHEL, the engineering and manufacturing giant, reported a surge in profits, driven by strong demand for its power equipment. The company's stock soared on the news as investors cheered the strong results. PI Industries, a leading agrochemical company, also posted impressive earnings, benefiting from robust demand for its products in both domestic and international markets. Gulf Oil Lubricants, a major player in the automotive and industrial lubricants sector, saw its profits jump on the back of strong volume growth and improved margins. The company's focus on innovation and customer satisfaction is paying off as it continues to gain market share. JK Tyre, one of India's leading tyre manufacturers, also reported solid earnings growth, driven by healthy demand from the replacement and original equipment manufacturer (OEM) segments. These companies' impressive results underscore the strength of the Indian economy, which is growing at a healthy pace. With a young and growing population, rising incomes, and increasing urbanization, India is a market with immense potential. Indico Remedies, a pharmaceutical company, received a key regulatory approval for its new drug, paving the way for its launch in a major market. The approval is a major boost for the company, which is looking to expand its global footprint. PNC Infratech, a leading infrastructure company, secured a major highway construction contract from the government. GR Infra Projects, another prominent infrastructure player, also bagged a significant order for the development of a new airport. The order book of both companies is bulging, reflecting the government's focus on infrastructure development. Biocon, a biopharmaceutical company, announced a strategic collaboration with a global pharmaceutical giant for the development and commercialization of its novel drug. These developments highlight the growth opportunities in the pharmaceutical and infrastructure sectors, which are attracting significant investments. The government's push for affordable healthcare and world-class infrastructure is creating a favorable environment for these sectors to flourish. The week ahead is expected to be another busy one for the market, with several key companies scheduled to report their earnings. Investors will be closely watching the results of these companies for clues about the health of the economy. Keep an eye on tech, healthcare, and consumer discretionary stocks. These sectors are likely to be the biggest drivers of market performance in the coming months. But don't forget about value stocks. These companies may not be as glamorous as their growth-oriented counterparts, but they often offer a more attractive risk-reward profile. The market is always changing, so it's important to stay informed and be prepared to adjust your investment strategy accordingly. Predicting the future of the stock market is a fool's errand, but that doesn't mean we can't try to identify potential risks and opportunities. One thing is for sure, the market is not going to go up in a straight line forever. There will be pullbacks and corrections along the way. The key is to not panic when these happen. Instead, view them as buying opportunities. The long-term trend for the market is up. So if you're patient and disciplined, you should be able to weather any storms and come out ahead in the end. Just remember to diversify your portfolio, invest for the long term, and don't be afraid to take some profits along the way. Investing in the stock market can be a great way to build wealth over time, but it's not for the faint of heart. It takes patience, discipline, and a willingness to do your homework. Before you invest a single dollar, make sure you understand the risks involved. Investing is not a get-rich-quick scheme. It's a long-term game. Don't put all your eggs in one basket. Diversify your portfolio across different asset classes, sectors, and geographies. And don't be afraid to seek professional help if you need it. A financial advisor can help you create a personalized investment plan that meets your specific needs and goals.